This could be the biggest light bulb moment for you in your trading career. Watch this video as many times as you need to. Each candle is a daily candle. You can see here that we're bearish. If you want to sell in direction with the daily time frame, you need to be selling above the opening price. For example, if price opens where this line is here, natural price action usually means that price would move higher first. This is where you want to sell because you are above opening price. And when you do sell, the candle will do something like this, and it would leave behind a wick exactly like this candle right here. Price makes a low, ends up retracing back, meaning the candle looks something like this. Let me show you the entry on a smaller time frame. These two blue lines here indicate 1 day of price action. This line right here is the opening price. As you can see, price expanded to the upside and then dropped lower. But if you look to the left of your chart, you will see a clear area of inefficient price action inside a premium area of the entire range from a higher time frame, which identifies a key area which you could sell from. As you can see, price drops lower and then comes back in, retesting this order block right here. This could be your entry because you are above opening price. You can find high quality setups exactly like this all the time as long as you are following the trend of the higher time frames. I challenge you to backtest this and see for yourself. In a retracement, once you measure the trading range, if price wants to, it can come to 50% and retrace and be classed as a valid retracement. It is obviously within our preference for it to come higher into our red levels in the OTE area, but it doesn't have to. So if you're looking for a trade opportunity at your OTE level, which is right here, and you notice that price comes to maybe 50% and then drops lower, that doesn't mean you got your analysis wrong. It just means the trade has gone to your target without you, because your target would be this liquidity right here. So always keep an eye on your trading range and always be mindful of the 50% level, because 50% is equilibrium, and basically in trading we use the 50% level a lot. And to be classed as a valid retracement, it actually only requires 50% retracement. Likewise, when we have an area of imbalance, that is the middle zone of the imbalance, it doesn't have to fill all of the imbalance. If it wants to, it can come to 50% of the imbalance and then drop lower. And just once again, if price comes lower than 50%, there's a little bit of a sign that price may revisit that area at some point. Your formula to success as a trader isn't to try and understand every single technical aspect of how the market works. It's by following a very simple step-by-step process that you can rely on and that ultimately gives you the best edge in the markets. This is the top of a trading range right here. This is the bottom of a trading range right here. If you measure this entire range, you will see that price has come back to 71%. The level between 71% and 88.6% is called an optimal trade entry level. That is a level you can take entries from. If you have anywhere inside your OTE level an area of imbalance or even a breaker block or an order block, you can take these entries with the utmost confidence that this level is going to play out. I like to enter at the 71% level, and as you can see with this level, we hit this imbalance and we mitigated into this breaker block, and then we targeted the bottom of this trading range below, which is sell side liquidity. So start backtesting trading ranges and start backtesting OTE levels and actually have a look at how many times they play out, and I promise you, you will be amazed. Just think about this here for a second. Close your eyes and just picture in your head something that you are really, really good at, and there will be something that you're probably better than any of your friends, any of your family. And I want you just to think about that one thing for just a second. Now, whatever that thing is, ask yourself this very simple question: how did you get so good at that? It isn't something that happened overnight. It isn't something that you were naturally just good at straight away. It's something that you had to dedicate towards. It's something that you had to put the time into understanding. It's something that you only got better at the more you did it. Because with anything in life, if you want to start something new, you're going to come in as a complete beginner, a complete novice. You're not going to know what you're doing. You're going to make plenty of mistakes along the way. The exact same thing applies to anyone who wants to get into the world of trading. You are not going to know what you're doing. You are not going to know which strategy you should choose. You're not going to understand the idea behind changing your mindset to get better at trading. This is an industry which needs to have more respect on it, because people think they can come in and get really, really good straight away and not understand that this is another one of those things which, if you want to get really, really good at it, it just takes time. And it doesn't matter how long it takes you. It doesn't matter if someone got good in 6 months, in 1 year. If it takes you 2 years, that's what happens. That's what you need to go through.